Okay, so before I begin this, I just want to say, those of you that are using these prices, you should be raking it in every day. And if you're using these prices, you know I can't make these up. I can't go in after the fact and change the numbers because you get them before the market opens. So if you're not making, there's definitely a fine line with what I can say and what I can't say. But what I will say is my top clients that use these will make between 5 and 6 figures a day. Yes, that means between $10,000 and $100,000 a day. So if you're not getting anywhere near that, even on the small end with a reasonable account, when I say reasonable, we're talking a few grand, you're doing something wrong because the market moves in the exact way as I've described through all of these videos. So if we look to the left, this is Friday. So remember, price will go from one purple line to the next. I call them red lines. Again, if you're just jumping into this, red lines, purple lines, the bottom line is that there's two separate types of prices. Okay, so whether you color them purple on your chart or red, it doesn't really matter. On my charts, I like purple because I use red for something else. So price will go from one purple line to the next, always, unless we get stopped by one of these orange lines. Now, what happens is price will use typically the orange lines to get to the next level. So what we can use those for is extra entries. We can re-enter. We can, trade some what we would call alpha. It just means, some really perfect entries on some other types of trades. So if we look to the left here, remember, what we want to do is we want to see where is the flow. So as the market closed, we were below this 28.95 price, right? So the next target, we don't get that until Sunday before the market opens. I believe I posted these on Saturday, maybe even Friday. I'm not sure, but we had these two prices, 904 and 906, a day before this even opened. And so we know that if we're long, this is the next potential target. So it doesn't mean that we can't drop because we absolutely can. But knowing that we've gone from one, we had succession above here because we tested it here, we broke above, and we used this 2883.5 as support very strongly, and it stayed in this zone for the entire rest of the day, which was about 7 hours. That's some pretty significant strength for price to stay above this level. Okay, so when we open on Sunday, let me actually scroll forward now because now we're talking about Sunday, which is where Globex starts, all the way down over here. We're basically at this orange line here, and it didn't care about that. We're just on Friday, we had a price a tick or two above this that we tested, and it already was trading in that area. So at this point, we have a breakout. Now we sit here from Globex open until we break through 7 hours later. So we sit up here for 7 hours. There's a saying I heard probably 20 years ago, the longer the launch pad, the greater the launch. Now we didn't have a massive day today, but we did have a good 26 points of movement from where we broke out above these prices here. So what's the next target? Our next target is the next purple line, which is 29.2575. That's the first one above these orange lines. Now we have these three here. What do we do here? Well, we can do a couple things. We're long. You better be long because we're breaking through. Shorts are not working. So if you're testing this short, we worked for a few points, but when we hold a price for this long, the likelihood of a drop in this scenario is almost zero. So our next target's the next purple line. So what we can do is we can take profit at any or all of these orange lines. What we can also do is we can also test them. Now we got here to the tick and we did not even make it down to this purple line. So what we do is we get out. We break even. Worst thing that's going to happen is you pay commissions. We attempted here minus a tick. We come back and at this point it's just past midnight my time and there's not a lot of volume. Nothing's really driving this thing. There's no obviously no economic announcements or anything that's really market driving at this point. So we can get out. That is, of course, if you're testing some shorts here, which for myself, I'm a fan of always doing that. Once we hit new levels, I want to test that as resistance. Okay, we make it to this next one. I want to test that. Where do we get out? Well, ideally down here through this range here where we kind of pop up, probably getting out there, especially if you're trading at 2 o'clock my time in the morning. That's 4 o'clock Eastern time. Probably don't want to sit through much of this. So we take a few points and we reassess. We come back here to test this, and it obviously holds. So again, our target is always the next price. And so what we're doing here is we're trading the activity in between the prices. Now, the only thing that prevents price from getting to the next level are these orange lines, and that's why you see them so reactive. So we come back up for the second pass, is what I like to call it, and we attempt to drop. And you can kind of see here, volume spikes up a bit, and we wick up and we come back down. We just kind of sitting on this price. Price is really testing this level here, and what we need to have happen if we're gonna drop is obviously we need to break lows. Well, obviously that doesn't happen. We come back. So if you're short, it's time to get out. Anytime that you test a price, whether you're long or short, if you get in at or around the prediction point and it goes in your favor and then it comes back like this, it's probably a good idea to get out, okay, if you haven't taken any profit. Now remember, we're still long from down at these levels down here, okay? Once we have this breakout, we know to be long, okay? If you didn't pull out any profit through here, then it's not going to happen after 7 hours, okay? So now we are approaching our target, and we always test targets. Okay, we can test these for short. We have 2 here. What I like to do, and ideally you get to the point where you're trading multiple contracts. My personal opinion, and this is just my opinion, doesn't make a lot of sense to front load your positions. What I like to do is break them up a bit, get in at the first price. If we happen to break through it, I'm going to add more to the next price, which we actually didn't hit. So my first entry would have been the winning position. And where do we pull out? Well, we want to pull out at the orange line, because if we're going to break above a level and it comes down to it, it's probably going to test as the opposite, in this case support. It held as resistance here on this first pass. It tested it on the second pass. We broke it and it's coming back down. You can see here it attempts to trend down, but this holds. We don't pass these lows right here, and it goes up for another test of the purple line. So what I'm doing is I'm walking you through everything that you should be doing on a daily basis. So you always want to look at prior price levels from the previous day to see where we're at. As far as the sequencer flow, we know that we on Friday were above this. We held very strongly above it, held for many, many hours. So we're looking for the next target. The next target is here. Okay, now if this would have had succession to the downside, we can get in on a breakdown and then target these. Obviously, it didn't happen, but that's how we trade that. And then it just becomes so repetitive. Same thing here, we get in short here, we can add to the position here. It doesn't get there, so that initial position, we win that. So that's, 4 points or so, and then we can get long here. We can, because we've had a significant break, we can get long, right? And then test this, and it, ricochets back and forth. But that's how you do that. And what you'll notice in these videos is I say the same thing over and over and over again, because it doesn't change day by day. It's the same thing. If I told you this was December 21st, you would believe me, other than if you know what the prices are or if you're looking at my time and date stamp. But it doesn't matter, because the market reacts to these prices in the exact same way every single day. Now, we do have situations where the market just takes off, and I'll do a special video on situations like that, but that doesn't happen very often, not even once a month. And we'll cover that in a different video. But I just wanted to review this because this should have been a very, very profitable day, and that's how you should have traded it. And this is not looking back in hindsight. This is how you should be looking at this. You're always going to test. You're going to target the next purple line as an exit to take profit, and you can use the orange lines in between, 1 to take profit and or 2 to get in on additional trades. Now, if you're going to be contrarian, meaning against your original position, so if you're long and you want to try any one of these for shorts and you're going to hold this long position, you obviously need to have a different account. So what's ideal is to have 2 separate accounts. And when you're starting out, just have one, do one strategy. But as you get that account going, what you can do is switch back to your open account. Open meaning it doesn't have any open positions. Take those contrarian trades. So we might call that scalping. So we're going to just scalp some profits out of this back and forth movement on its way to the next target, right? And then that's it. And then we get our target, and then we repeat the same process over and over and over again. Okay, if you have questions, just send me an email. I've been doing this for a very long time. Prediction points were created in 2007, and they worked exactly like this ever since then. They have not changed in any way, and the market gravitates to these prices. So that's a wrap, and we'll continue this in the next video.